Hello, everybody. Thank you all for joining. It's Rollercoaster time, and thank you, Pancake and Zeno, and the mods in the chat. Sometimes, the people who've been around crypto a long time, they have their seatbelts on. They expect this, and they use these opportunities to do things like buy calls back and snipe some more at good prices. That's just the nature of crypto and Bitcoin and markets in general. So, Andy, good to see you too. So happy Tuesday, everybody. Global crypto market cap, 1.83 trillion. All right. This has been a very, very good year so far. Very good last 13, 14 months as well. Volume, $90 billion. Bitcoin price, as we speak, is 49,300. So literally it's up $1,100 from where I bottomed this morning. That's why this is called the Rollercoaster Show. What else is going on? Fear and Greed, 79. Boom! That's almost TABI level, but we'll look at some on-chain stuff and try to figure out what's going on. So thank you all for coming. A lot of stuff to cover today, including two very detailed topics. So when I get to these slides, you need to concentrate because it's tricky. And this is not financial advice. And shout out to everybody on Patreon who make all of this possible every day, sometimes twice a day. From Gillian Costa, thank you for doing what you do. Just joined Patreon a couple of weeks ago. Really love having the information and support with my like-minded people. Well, thank you so much for being here, Gillian. And I couldn't agree more. And in fact, I learn myself all the time in the community as well. So two minds are better than one. And there's a lot more than two minds in there. So let's start with the good news, everybody. Thank you all once again for coming. Happy Tuesday. Taco Tuesday. Crypto market, the last 7 days. It looks kind of nasty. This is everything compared to Bitcoin. You see IMX, Stacks, Helium, all kind of dark green, which is good. Solana beat Bitcoin by 1.5%. Tau, Optimism, Near, Hedera, etc. So not too bad. A little bit of red with other areas. But when we look at this chart in US dollar terms for the last week, it paints a very different story. And sometimes people have very short-term memories. They see the market being down for a few hours and they lose their minds. But when you zoom out and you see exactly what's going on, Recluse Man, thank you so much. You are so grateful. We are so grateful. Sorry. Blah. Bitcoin is up 15.23% for the week. ETH 14%. Solana 17%. Avalanche 15%. The only red sign there is XMR Monero. And you know we don't like things beginning with X's in this channel. So if anybody's looking to give birth to a new cryptocurrency, don't use the term X. Anywho, let's talk about some market stats and how far we've come just in the last 4 months. This is staggering. Again, sometimes you got to zoom out to get a feel for what's going on. Here we have the total market cap today, 1.87 trillion, as I mentioned. Very close to that 2 trillion, and we're going to maybe 5, definitely 3. Active users, 7.26 million. Transactions, 57 million. And that's versus 1.3 trillion versus 5.6 million versus 40 million transactions. So everything is up, again, a lot. But let's get into some of the tricky stuff. Bitcoin halving, 64 days away. Call it 2 months between friends. Not a long time to go. And we're in that beautiful pocket. Pre-halving run, post-halving explosion. It's going to be a good time. We'll also talk about miners today as well and the impact of what they're going through. Let's look at money flow like we do every single week. And now everybody's talking about money flow. I've been talking about it for years. Now everybody is. So this is so important to look at. Digital assets. You can see here, we had a $1.1 billion week. Not as high as 4 weeks ago, but still, year-to-date inflows now is nearly $3 billion US. And AUM is at the highest level since late 2021 at about $60 billion. And we are still early. Every day now, I do a special ETF update because there's so much going on, just Bitcoin specific. So for those people that don't want to know about macro and stocks and disruption and layer ones and crypto, they can just tune in for that. So Linda, thank you so much. But let's look at what I covered this morning. This is how much Bitcoin has been absorbed into the new ETFs in just 22 days. Literally 223,000 Bitcoin in 22 days. You can basically say 10,000 Bitcoin a day are going in at this rate. And that is staggering. Staggering. Okay, now, what's vexing to many is I show this data and I show the amount of absorption and Bitcoin price goes down. People don't understand. Well, I think that's because of two reasons. One, I covered this morning. I think DCG is selling their GBTC stack, and that's hitting the market right now, and that brought it down. Also, risk assets got a little bit rattled by the CPI. I'll talk about that in a minute too, but I think its majority is selling, because nobody is selling their Bitcoin at this level. Nobody. But there's $500 million coming in every single day. I said that's like having something like 25 million people DCAing into Bitcoin every single day. The average typical retail investor DCA amount. That's how big these ETFs are. So please, everybody, just look at the big numbers and the money flows. It's crazy. Flows by asset. You can see here, Bitcoin saw almost 98% of the inflows of nearly 1.089, call it 1.1 billion. And the appreciation also buoyed sentiment for Ethereum and Cardano. Ethereum had 16 million come in, Cardano 6 million, and Solana just 100,000. And there was outflows in Avalanche, Polygon, Tron, Uniswap, and also, let me see, short Bitcoin had a little bit of an outflow too, but that changed as well over the last few hours. That went up. But again, good to see money coming into the space and very little outflows too. Let's talk about fear and greed. This is crazy. This is the highest fear and greed we've seen in a very, very, very long time, up at 79, which is extreme greed. Sometimes this can be a top market indicator, but I'll show you other analytics and charts that we have that we created exactly for this time that show we are not getting frothy at all. So things are different this time. The whole ETF thing has thrown a kind of a wrench into the whole gearing and system and on-chain and everything else, but we are on top of that. We'll show you in a minute too. This is Bitcoin monthly returns. February is up 16.1% so far. Yes, we had a lackluster January, up only 1%, but boy has February been on fire, and March will be on even more fire, and April will be fantastic as well. So seatbelts. And the good thing to note is, typically, you get every, say, 4, 5 green months in a row, you'll get a red one. But we may not get a red one for quite some time because the money is coming and the world needs Bitcoin. So that's a great thing for the whole space. Now, back to one of our charts. Here's our top and bottom indicator. Notice it flicked back to lime green. So think of these colors as levels of stacking versus when to start layering out of the market. So when you see the dark blue at the bottom, that means buy as much as you possibly can, as quickly as you can. The light blue, same thing. The teal, well, stack away, but also consider, say, proxies, etc. And this is what I do, and my goals are not your goals, but there's certain layers that I buy in heavy and really hard, and then I stagger it back over time. But the lime green now that we just went back into, we went yellow for a while. Yellow is kind of like neutral. We're back at lime green. Again, this is based on 20 on-chain indicators that we have decoded over a decade to really understand when the market is hot and when it's not. So despite fear and greed being at 79, this chart will tell you, nope, we're back to accumulation mode. So for those who don't have enough Bitcoin, under 50K is definitely a non-financial advice, good time to buy. Sounds ridiculous. Now this is one I'm going to spend a few minutes on. Normally I try to get one kind of slide done per minute. Fast at you, but this is going to take a few minutes because there's a lot in this. And this is from Bitcoin Magazine Pro, which I subscribe to. By the way, I subscribe to pretty much everything out there. Jeff Hammer, thank you for coming. But this dashboard is worth sharing. I always look at it and say, that's cool. But the key thing to take away from this, before I dig into some of the key metrics, is you have 15 of these kind of indicators are bullish, 9 are neutral, and only 5 are bearish. All right. So you got nearly 30 indicators and only 5 or 1/6 are bearish. Now, this is a whole bunch of cool metrics. This is Octa, so we spend a lot of time in on-chain. So first of all, you will see here realized HODL ratio, MV, RV, Z-score, reserve risk, etc. These metrics, they show different aspects of how Bitcoin is being held or spent by holders, investors, speculators, whatever. And for example, the realized HODL ratio can indicate the confidence of long-term holders, while the MVRVZ score relates to the market value versus realized value, which can signal tops and bottoms. And again, all good in the hood there. Mining We have the hash rate, the hash price, Puel multiple, and these metrics really focus on the health and the economics of Bitcoin mining. And Bitcoin miners are about to go through a big shellacking unless the price of Bitcoin goes up a lot. And the hash rate indicates the total computational power used to mine and process transactions. Puel multiple rates to both the supply side of Bitcoin's economy, the miner revenue divided by 365-day moving average. It's a very, very good top and bottom indicator. And then you got the derivative stuff, perps funding rate. That's high, which can be a bit frothy. The options delta skew is there as well, which can indicate things are a bit frothy. But sometimes options players, and I will do some options analytics in a minute too, to back this up. Then you got the Meyer multiple, multiple day moving average, realized price, etc. Then you got global M2 money supply. This is so important in the dashboard, why I love it, because it takes into account global macro as well and US net liquidity. And they give you a good feel for where the money is. Remember, more money floats all boats. And then you've got Bitcoin miner ETF, Bitcoin fund flows, etc. reflect broad investor actions and what's happening. Now, per all of this, you can see most of it is good. Most of it is green. All the price action is green. All the macro is half green. That's probably where some of the weakness is. The hash price is expensive. That's bearish. And also the options 25 delta skew 1 month is bearish, but the rest is neutral or positive. So net, extremely good for this stage of where we are in the market, especially considering the move we've seen. Bitcoin is up 230% off the bottom. 230% for those that were buying, 16K below. And that is a good time. Now we're going to talk about a little more action because I've been watching options analytics for years, and I started sharing them a couple of years ago here on the channel in Octa every Tuesday. This one is interesting because whoever places these bets, they are so good, and they are a forecast window to where we are going to go. So let's look at this chart. I'll zoom in real quick. And again, as I said before, this has been money for the last 12 months. And you see a whole bunch of stuff here. First of all, the chart shows you the options contracts that have been not been, they're open. They're not closed or fulfilled. Also, the strike price across the bottom going all the way up to $165,000, ladies and gentlemen. In addition, these are the prices that contracts can be exercised, bought or sold, and open interest represents the number of contracts at each strike price. So the higher the bar, the more interest people have in placing contracts at these levels. So this is going out to September 27th, 2024. And what this tells me is a lot of people are placing bets at 65K. And so far, from watching this every single week for years, when the big players have the majority of their bets at a certain price out in the future, the price normally gravitates to that. Now, there is a thing called max paying price. This is the strike price at which the highest number of options, both puts and calls, would expire worthless. And in traditional markets, the max paying theory suggests that the market will gravitate towards this price as options expiration approaches. However, in the crypto market, you have a combination of investors. You've got your perma bears, you've got your people who don't know what they're doing, and the people that do. So sometimes you see this max paying that's way off the reservation there at 38K. We're probably not going to see 38K again. I'd say there's a 95% chance we will not see $38,000 Bitcoin again. You heard it here, folks. You can bookmark this timestamp of this video. But with the money flow I see and the hardness in the on-chain, it's going to take a severe black swan event to take us down to 38K again. But some people believe that's possible. Now, other stuff on this chart too, the notional value is the total value of the options contracts if they were all exercised. And that's about $170 million, which is big. The put to call ratio of 0.35 is extremely bullish. So not many people are bearish right now. And again, 65K easy by September per this. And we're going to see confluence here of a whole bunch of different indicators all telling you the same thing. That there's good times ahead. Now, by the way, we were 50,400 yesterday. To get to 65 isn't a very long stretch at all. You can nearly reach it and grab it. Anyway, another piece here, some more on-chain stuff. Bitcoin distribution based on acquisition cost. This shows you the supply distribution. A couple of things I want to point out is one, 87% of people that hold Bitcoin are in profit. only 13% are in loss. And a shout out to the team at Glassnode for bringing these beautiful charts together. They make my life so much easier. The short-term holder supply in the 40 to 45k range is the people, kind of the tourists that just jumped in, then they're in there and they're getting in, which is good. That's kind of the reddish stuff. And the long-term holders, who represent the remaining 30% of the supply, the people that bought above 50k, have been holding for years. And it's only a matter of time before they get to this. The other thing that's cool to note here is you can see that all the top buyers, the only time, if you add up the total number of days where Bitcoin price was above 50,000, it's about 120 days in total. So it hasn't been at this level for very much of its 15-year history. But we're going back to 50k. In fact, let's check on the price. 49.5. That's the good juju from all of you out there. So thank you for coming. Now, Bitcoin, there's some confusion as well with on-chain. I remember I did say at the beginning that this time is different in so many different metrics. Well, it seems that Bitcoin did have a huge growth spurt recently. Market cap shot up by a whopping 102 billion in a few days. And while its market cap was busy flying, the realized cap only grew by a modest $4 billion. Okay, so it's kind of simple to understand, and it's a very bullish sign too. So price goes up, market cap goes up, but very few actually sold. Therefore, there's no realized cap because very few Bitcoin actually changed hands. This is insanely bullish at this stage for such a big move. Okay, we're talking nearly 10% of the market cap of Bitcoin to shoot up, and nobody's selling. It's hard, as I say, very hard. In addition, long-term holders, you can see here they have 15 million of the Bitcoin supply. And there is still that GBTC dumpage. I did touch on this earlier today in the ETF video, so I won't dwell too much on it. But the point is, the big takeaway really is when all this began, the exact time right before the ETFs were launched, Grayscale had about 619,000 Bitcoin. They've shed over 151,500 of them in 22 days, which is absolutely huge. And there's still a little more liquidation to come, and I think some happened today too. So that's the big takeaway. So there is on-chain moving from Grayscale to new hands, or just moving to cash and then moving into other speculative assets. I'd say only half, less than half, is actually moving into the new ETFs or even Bitcoin proper itself. So watch this space. Very important. In addition, sorry, it is Octa, but this is one of the trickiest ones. One of the great things was put together by Joe Consori, which I love. So shout out to Joe and his brilliant work. What he did was, again, save me a bunch of time in doing this, he made a correlation between Bitcoin halving cycles and Fed easing cycles. That means when the Fed will cut rates. A lot of talk about the higher print on CPI today, which rattled the markets a bit, but that's okay. They'll be back tomorrow. But the chart tracks Bitcoin's price over time, showing the halving events, if you can see at the top there, and also the second Bitcoin halving of 526 days, the third Bitcoin halving 547 days, but how that corresponds down to the chart below. And either this is made to be this way, or the coincidence is uncanny, and I don't believe there's any such thing as coincidence. So enter the Fed Reserve policy. The chart of the Bitcoin halving also correlates to the time at which the Fed cuts rates. Very weird. Now, when the Fed cuts rates, there's talk now they might be delaying it for a little while, but when they do, risk assets will go to the moon, and QE will happen. More money, raising all boats, as we say. But the correlation between this and the Fed rate cuts and Bitcoin halving is incredible. So not only are you going to have the increased hardness from the halving, but at the same time, you're going to have the Fed cutting rates. And people will not be holding cash. They're going to go after risk assets, and it's going to pump Bitcoin up a lot too. I mean, you could not paint a more perfect backdrop for where we're going into right now. So once again, thank you all for being here on this journey. Now, this is the stuff that rattled the markets a bit this morning. Basically, shout out to Sanjay for sharing this with me. You can see this is the May 2024 Fed meeting, and the expectation for a Fed cut is not as much. Currently we're at 525 to 550. So basically it's saying 62% chance we'll stay here. and a 34.4% chance will cut. I personally think that's going to change a lot over the coming months because they're going to get more economic data and it's going to show what a mess this world is. A few more banks will probably hit the wall, more unemployment will happen, and then the anomaly in CPI will come down. By the way, when I dug into what caused the CPI, literally 20.6% of it is caused by car insurance inflation. A huge chunk. Nearly 40% of all the inflation here is just driven by car insurance. Bizarre, very bizarre. And there are a few other elements too as well. Transportation 9%, hospitality 6%, car repair inflation 6.5%, homeowner inflation 6%, rent inflation 6%, and food away from home 5.1%. I never understood food away from home. Does that mean people get takeout and delivery? I got to look into that, but I think that's what it means. Anyway, let's talk about some cryptos as well. Let's dig into the Crypto Compendium. And you can see here, this top chart is the top 100 cryptos over the last 7 days. And the winners are DIM, Kaspa, Stacks, Pyth. Of those 4, I only own one of them, and that's Pyth. And the losers are Jupiter, Pendle, ENS, which is the Ethereum name service, and FXS, which I think is Frax. And then over the last month as well, the winners are Pendle, Fleur, and Pyth. And over the losers are Algorand, Osmo, Tezos, and Jupiter. So it's been a mixed bag, but Jupiter was that biggest ever free airdrop. So people are still dropping their coins. We're not ready to quite jump into that building yet, but soon, getting closer to the time where I think it's maybe going to be worthwhile. In addition, back to ETH, this is Franklin Templeton. They have officially filed their application for a spot Ethereum ETF, which is exchange traded fund. This is the 8th company to file this. Remember, Franklin Templeton run $1.5 trillion in money. They are nearly half the size of Fidelity. They are big, and they don't make these steps without an intention of getting it fulfilled. So this tells us that summertime 2024, we're probably going to get the Ethereum ETF, which will pop Ethereum quite a bit too. A little bit of Solana news, not too much. Solana is actually in the green today, which is very surprising considering everything else is kind of red. But Solana hits 100,000 pre-orders for the SAGA 2, which is mind-blowing. I think they made about 12,000 of the first one. I think this is called Chapter 2. SAGA is the very first version, which I have one as well. And people are hungry for it because it's going to be full of airdrops and it's going to pay for itself. And who doesn't need a phone anyway? Let's look at the stock market real quick when we talk about the miners, a little bit of macro, and some bad and ugly news too. Stock market over the last 7 days. You can see kind of mixed, but NVIDIA, TSM, semiconductors still on fire. Meta, Google just about up. Apple down, Microsoft down. Tesla down, I think. Where is it? Down 1%. Not too bad. And then everything else kind of mixed. So it's a all over the place mixed bag. But semis that drive the AI revolution are still on fire. Eventually they'll run out of steam, but I don't see it happening for the near-term future. Now, shout out anybody here who owns CleanSpark. This is kind of incredible, but that's been my favorite miner now for over a year and a half, I think. And CleanSpark is the highest from its 52-week low per our miner model. You can see that the distance from the 52-week low for CleanSpark is up 680%. It has had a crazy week. It even is having a crazy day today, considering the Bitcoin weakness. Number 2 is Mawson. Number 3 is Marathon, up 404% off the high. And then Bitfarms, Wolf, etc. The other way to look at this chart is you can see which ones are the furthest away, like the gains they have to make to get back to a 52-week high. And although it's green at the bottom here, typically that's a good sign because you expect good assets to get back to their 52-week highs, but sometimes they don't make it. So in this regard, just to read this chart carefully here, HUT has 161% to gain to get back to 52-week highs, but there's no promise it'll even do that. So read this carefully and you can see CleanSpark 3% from its 52-week high. So you want things in a bull market to be making new all-time highs, and that's kind of what's happening here, and that's how to read that. Now, speaking of miners, it's been the most incredible way to play Bitcoin is through proxies and miners, and many of us here adventured on that, and it's still continues to blow my mind. Anyhow, miner reserves are close to a 5-year low. I don't know what that word nicely is doing in there, but cut the word nicely off. But the miners, they are literally shedding as much Bitcoin as they possibly can to buy new state-of-the-art rigs, because they know after the halving and with the hash rate going to the moon, they will not be able to compete unless they have cutting-edge rigs. So you're seeing that happen here after they spend, and once Bitcoin really starts moving up, they'll try their best to hold it onto it as much as possible. Now, a little bit of Tesla news too. This week I decided to do a quick little mind map summary. A lot of good news. The stock price still sucks. Yes, down 1.2% for the week, but hey, at least it's stable. But starting with the Elon Musk news, because that drives a lot of the stock price. He was found not guilty of funding secured tweets in trial from 2018. He was ordered to testify in an SEC Twitter probe. Again, the government's still gunning for him, and he said he has too much work on his plate to talk about the new products they're working on. There was supposed to be a session where he would do that, but he is just way too much going on. Giga Berlin hit 6,000 vehicle run rate per week. You can multiply that by 50 to get an idea. So they're at 300,000 a year and ramping up to 500 to a million cars. And Model Y production has resumed because even though it took an extra 10 days to get the parts from the shipping route to go around the bottom of Africa to do it, now they're back in business. Tesla Japan had a Cybertruck video and Japan said, see you soon. I don't know if they'll get a Cybertruck in Japan. There's enough demand in the US for the next 7 years, so we'll see. And Giga Texas is now making Model Y with 4680 cells and structural pack. There's a lot of talk regarding the cells. They are the Tesla's own design cells. They're very powerful and they're a little different formation size. But there was talk that they weren't able to make enough even just to support the Cybertruck. The fact that they are now doing it for the Model Y2 means they've solved their scalability problems with the 4680 battery, and price cuts in Europe and the US, Model Y, but it's just till the end of the month because people, like they don't buy real estate in Jan and Feb, they also don't buy cars, so it's $1,000 off if you're wanting a little bit of incentive to buy a car, and that helps literally the manufacturer smooth out production. It's real simple. People freak out, but it's not a big deal. And most of the cars they have in inventory anyway. And what else? Model 3 price increases. That's the new refresh Model 3, but it's a lot more car for the money. So they're dropping the Y, increasing the 3. At the end of the day, it all evens itself out. Now, bad news time. Sorry, I have to do this. Bad and ugly. Invariable. NASDAQ, Bitcoin correlation. Still tied together. Last week they were bang on. The first time I ever saw them both do the exact same thing over the last 90 days. The returns on Bitcoin 16%, return on the QQQ 15.25%. In addition, AltSeason is down to 49. It was at 76 last week. And Bitcoin wins the week. But when you look at the altcoins compared to Bitcoin, the performance is far higher. Again, as usual, we've got our X's in the bottom right corner, XRPs and the XMRs and the XLMs, and Matic still down there too. Like Matic has made nothing but a loss over the last 90 days. People ask me why, and I say Arbitrum's taking all the business. And you can see Arbitrum up 80% in the same time frame, etc. Bitcoin bang in the middle, 30.8%. Huge 90 days for Bitcoin. Well done, everybody. Early days yet, and I don't know how much longer we'll be under 50K. Speaking of Bitcoin, again, still 49.5. Now, there was an asset here. Where was it? The winner of the week from this chart for the Crypto Compendium is this thing called DYM. And I didn't even know, in full disclosure, it's very difficult to keep track of 3,000 different cryptos in your head and watch all the markets and all the other stuff. So I didn't know what DIM was. And the name is funny. But Dymension is the ticker's DYM. It's a roll-up platform. Yet another one. Yay. And this is... They had a 5.2 billion valuation after apparently a botched start. I wasn't tracking it. Big Brain staking holds over 35% of the staked DIM tokens, attracting criticism from DIM holders for its large network influence. And I did a little bit of research. There's a guy on Twitter called Crypto Stream, and he says he dug into this token. He said there are no signs of any real adoption, despite they claim they have over 1,000 roll apps, not roll ups. These are roll apps, which is a different word, maybe, deployed on the Dymension test net. and DIM holders speculate on airdrops in these applications. So it's like a degen's wet dream to get all these things. People love that free money. Anyway, this CryptoStream fellow could not find a single real project. All right, so it's just gimmicks and DeFi, fake Fi, whatever. And we've seen this happen before with other chains. Not going to mention them because I don't want to upset people's bags, but you know how I feel. So I went and had a look at the Crypto Compendium, top 500 tokens, find out where DIM ranks. DIM is right down there with another name, which will remain nameless. I mean, it's down with a Crypto Compendium score of 2, which is garbage. Again, that's down in the bottom 17th percentile of all the top 500 crypto. And you know how much garbage is in the top 500 crypto. So the lights on DIM are getting dimmer per our model. But that doesn't mean, because people still don't do fundamentals and detailed analysis in crypto, they just chase pumps. So it doesn't mean price will not go up, but it will go down eventually. Again, we'll see. Speaking of going down, global liquidity is still down. This is taking me a bit by surprise. Where is the money? I did promise you all 100 trillion in global liquidity by the end of the year, and we keep getting further and further away from that, but we'll see. We need the Chinese to put on their money printers, which is going to happen real soon. And then the US will do the same, and then Europe follows the US because they can't make their own minds up at the European Central Bank. Shout out to Christine Lagarde and everything else. So I'm making myself very unpopular today. And more spending, and I'm not political, but another $100 billion, $95 billion aid package is now going out to the Ukraine. And I think, I don't know the exact details, but I think they signed this during the Super Bowl, maybe when nobody was looking. The point is, another $100 billion of money is created out of thin air and left for future generations to pay back. And of course, they can't because we're in a debt spiral. And that's just the nature of the business. So, as usual, every single video is recapped by our team that manages Substack. Thank you so much to them for doing that. Now, time for some ugly news. There's only a little bit of this, thank goodness. Unlocks this week. We have a thing called Cyber, 17.3% unlock. Wow, that's big. Sandbox money grab keeps on going. Another 9.19% hitting the markets. Oh dear. Yeah. Anyway, Euler rains every week. No surprise there. Ape, is that still around? That's raining too. 2.61% unlock. Manta 2.66. Rose 2.54, etc., etc. Beware of these things because after an unlock, price goes down normally. And sadly as well, Axios reported that US adults suffered a record $10 billion in fraud in 2023. I guarantee you that's going to be higher in 2024. Hackers are smarter, better, more prepared. They can bypass very severe security. I will be doing a security update exposing all the things you can do to protect yourself and lock yourself down. There's still a lot you can do. And there's some stuff that people forget to do. Or there's things that people thought they did, but then it got opened up, etc. I will be covering that because I think it's so important to make sure you are not one of those losing $10 billion, because in 2024 it'll probably be 12 or 13 billion, maybe even higher. Thank you all for being here, everybody. Subscribe to the channel if you want to get smart. I won't waste your time, and you will never see a paid promotion. And I'll see you all tomorrow. Thanks to the mods in the chat, and got everybody. Preston's here, and T&D Tesla, and K8. Appreciate you all, and Jeff Hammer, and I missed one too from staff. Appreciate you too. Have a good day. I'll see you all tomorrow. Bye bye.